All right, happy Monday, everybody. Welcome, Anthony Special here with Special Analysis. We're going to walk through our major market analysis for this week. Obviously, last week was quite intense. We had a legit push to the downside here. Essentially, we retested the June bottoms or June lows pretty broadly across the market. So we're going to talk about where we are, talk about what we could be anticipating coming next, and kind of move in that direction. So I won't make this too long, but I just want to walk our way through at least the major markets. I think for those of you who are experienced traders in a down market, then you should be having a very successful time with this. If those of you who are not successful down market traders, just because you haven't been in the field long enough, listen, be careful for one. For two, make sure you're following the right person or you're taking the right advice. You're not just going to want to listen to anybody in these conditions because they can get painful. I'm not gonna lie to you. We're not trying to buy the dip here. We recognize that the market is continuing to go down. There's nothing here that prompts us to buy at the moment. Unless you're looking to start averaging into a portfolio type position, we could have a long way to go, or we could make a double bottom here. But until one of those two have been confirmed, or as this market presents itself, you need to be cautious. You need to, be very rule based. You need to follow the plan here, and if something's not working, step out of the way, or reassess it. But if this market is too choppy for you, rather than hurting yourself, rather than losing money, simply step out of the way if you're not prepared to follow somebody who is versed in this market. Because at the end of the day, if you don't protect yourself, there's nobody in this market that's going to do it for you. So just keep that in mind as you continue to navigate through this volatility. Me personally, I love this. I mean, this is what I wait for. I mean, this is when money's made and it's made fast and it's made efficient. I love the downside. I always have. I always will. When we do get further down the line, the opportunity to own great companies comes along at very discounted prices. So, there are, to me, lots of benefits to the downside. But, not everybody has done this as long as I have, and not as everybody is as comfortable or confident in this as I am, which is fine. But, I'm here to just try to help you, try to give you some thoughts and some insight, just step forward, from week to week. So, what we're looking at first is the Dow. You can see that we've essentially closed at just about a perfect double bottom off of the June lows. We've tested a descending structure. This is the structure that really kind of started to begin the downturn in the market itself. So this is a key area. We'll see if it holds in the coming week or not. We have a couple structures below the orange channel and black channel. Breaking down below 30,000, really pushing into the mid 20s, could accelerate this to the downside. But keep in mind, looking back at the 2000.com bust, there was 20+% rallies. So, if this is a bear market that's going to be here for a while, and in my personal opinion, that's very likely what we're going to be facing. These bear market rallies are going to exist. So we need to be able to identify them, either take advantage of them carefully or step out of the way and then re-enter the market as the market continues to stay with the trend. And it's very obvious the trend is to the downside. So next up is the NASDAQ. This looks like it still has a ways to go. I mean, we came pretty close to making a double bottom here off of these June lows. But as far as a support structure goes, where we currently stand, 10.5 is probably a reasonable area. So this, easily could have another 800 plus points to push before it finds some kind of support. So we'll see if that follows through or not. Tech is obviously the market that is, leading the downside here. So it is what it is. I have some of my students in short tech related stocks or tech related ETFs because this is what's performing right now. So when we can identify an area that's performing and we can capture the direction that we're looking for, well, that's what we're obviously here to do. We're here to identify the opportunity. So my students in part-time profits, that's where we are. We are actively short the technology sector because that's what's making money right now. S&P 500 approaching that similar channel structure, just like the Dow. Also, again, approaching that June low, double bottom here. So this is a key area to hold. Breaking this low is very significant to seeing this market leg lower. The fact that we never overcame the 200-day moving average on any of the four major indices, Dow, Nasdaq, S&P, and the Russell, was very key at recognizing that we have a high, a lower high, another lower high. So here's your impulse correction, anticipation of some type of impulse will have some type of correction as there's profit taken and position acquiring in this down market. So it's, fact of the matter is the things that have caused this market to turn haven't changed. Inflation's still here. A strong dollar's here. Interest rates rising are here. More money than the history of forever pumped into the economy that was unearned, still exists. An inflated real estate market that's unsustainable is still here. I mean, these things have not corrected yet. This all takes time. So just be aware of it. It's going to be around for a little while. We're more than just a quick correction in a bull market. The market has clearly turned, and we just need to be aware of it. So the Russell's approaching that similar floor where it found support back in June. If we can break below this, I mean, this could be an excellent opportunity to short here. I mean, this is really just clear to fall. So we'll be watching for that carefully. Gold futures testing very key support here. Prices reacted to this teal structure multiple times supporting gold, but it looks like we're trying to push through it. If we get that push through, the 1500 handle, we could easily lose another 100 points on gold pretty quickly, pretty efficiently. So we're going to be keeping an eye on that opportunity. We navigated, for those of you who follow, this market impulse corrected. And then as the market broke back into this channel structure, we shorted it right here and we bought it right back down here. So we had a nice short opportunity that transpired here over the past several weeks. Crude oil, just starting to break through that key channel right there. If that blue does not hold, I needed to push a little bit further to confirm. But if it does, we're looking to fall into the mid 60s in the next coming weeks or so. So it would not be unlikely to see this transpire. So be watching for that carefully. Bitcoin continuing its grind lower. We're under 19,000. My anticipation is some type of support in the $16,000 handle. If you are short an asset regarding Bitcoin, because I don't believe you could short Bitcoin itself. I would have my my entry was up here about 31 and change. I'd have a stop working somewhere right above these highs, around 25,000 and change. But I look pretty confident here that this is going to continue to push its way lower. So it's just doing what we anticipate it to do. So we're just watching it. And last but not least is the dollar index, which continues to rise as this market continues to weaken. So the dollar index is fairly significant. I'm going to just point this out. You have a double top here, 2008, 2009. You have a double top here coming out of the 2000.com bust. So there's some significance to this price action surging. And that's exactly what's happening right now. Price action is surging. The higher this continues to climb, the worse off the market's going to get. So, I've been watching this for quite some time now for that very reason, because I'm understanding and anticipating that if this continues to grind higher, everything else continues to go down. The stock market is a discounting agent. It's what it is. That's what it's designed to do. The stock market is the ultimate place to decide where buyers and sellers come to decide what an asset is worth, whether it's a commodity, whether it's a stock, whether it's a company, whether it's whatever. There's nothing greater and nothing more pure than what the market actually, decides something is in fact worth. So that wraps up this week's video. I just kind of want to walk you guys through, what I'm looking at, what my interpretations of these things are. As long as this dollar continues to surge as it has, and you can see, I mean, literally, I mean, it's just marched higher, for the past, especially the past, 9, 10 months. This is going to keep suppressing this market, and that's what we have to watch out for. Again, if you're efficient at shorting, if you're efficient at buying puts, if you're efficient at selling calls or entering the market in a short position, the opportunity to make more money, a lot of money, and making that money very quickly right now is absolutely incredible. So, for those of you who are comfortable, you should be, rolling in it. Those of you who are not comfortable, again, either step out of the way, find somebody who can help you, try to get some direction, because this is something that's a little tougher to navigate. Most traders have not been in the market long enough, because of the new traders that came into the market during COVID, to live through significant down markets and how to navigate them. So until you fully understand that, until you've been through a decade worth of market cycles, it's a different environment. So just be careful, be cautious. That's really my message among all, above all, I should say. And if I can help you, that's what we're here for. Myself, my colleagues at Traders Agency, feel free to reach out to us. We're more than happy to try to give you some assistance, try to give you some guidance, give you some advice, and some exposure to some folks who have navigated this market successfully in the past. So I appreciate your time. Thank you for joining me today for this video. I hope you have a great day. And again, be safe out there, and we will talk to you soon.